What generally is the decision-making process to ascertain the appropriate risk reward? Is there a recommended buy box for newbie note buyers to make their life easier and highly likelihood of success?
Yeah, great question. There is definitely a sweet spot when you're first getting started where the bigger players aren't making bids and competing, and that's with the smaller balance loans. Your fixed costs don't scale with the balance. Your percentage that you're spending on due diligence when you're buying a small balance loan is pretty high compared to what you're actually getting. I would say that those small balance loans are really the place to start to hone your process, to learn the business, and then eventually move up to like $10,000 and up UPB principal balances. A lot of us on the call really like second liens for several reasons. You can diversify more. The due diligence is often a little bit more affordable because you don't have to be as concerned about your first lien holders protecting you as the junior liens, because if taxes go delinquent or the homeowners association starts a foreclosure, they're normally the ones to say, let's take this as a corporate advance. We'll pay the tax balance and the borrower will pay us on the back end. So they protect all the other lien holders. So seconds are great because they're a little more forgiving in that way. As far as geography, I think would be the next place to look as far as honing your buy box. And in the beginning, it's a good idea to be looking in your local market, depending on how active your state is for note investors, not necessarily note investors, but inventory in your state. There may or may not be a lot of product there, but it's good because then you have an idea on property values and you maybe have a little bit of a competitive advantage since it's your home turf. The first half is like defining the buy box. The second half is like, how do you actually define the pricing? One is obviously what's the market. If you have to be competitive, the market is going to dictate that. But the other side is yield. And generally the way that pricing should be conducted is thinking in terms of your end results and then backing into a price that fits the yield that you'd hope for in the worst case scenario. So a lot of times a foreclosure and taking back the property is normally a pretty decent, when you've got equity, it's a pretty decent return. So then you look at things like if this loan were to reinstate and the borrower were to make monthly payments, what kind of return would we see in that scenario? And then you essentially just pick your number where you're hoping to target maybe 30, 40, 50% returns, price your acquisition based on what that result would mean if it comes to pass. If the borrower reinstates, start making payments. If they do go through the foreclosure process, the best next step is just to make some offers and we'll let you know kind of where loans are trading for. So that's the other thing with defining your buy box and your parameters. In the beginning, I think it is good to expand your preferences and be open to other types of deals because everybody wants non-performing seconds behind performing first with equity. And that's why the pricing is 60, 65 cents on the dollar. And for the most part, those are a pretty sure thing. If your title is clean, if the docs are enforceable, if everything, your due diligence wise, your T's are crossed, your I's are dotted, it's a pretty sure win. But the yields aren't going to be as high as if you're buying an unknown senior lien. But those types of deals are where you can get the home runs. You know, if you're looking at a full equity second lien over 60 cents on the dollar, but if you really want the best bargain, buying foreclosure initiated seconds, obviously they're more risky, but you're paying, pennies on the dollar.
Nobody is talking about the revolution happening in real estate, where regular investors can earn great profits while helping homeowners that the banks have failed. Join the movement and start your journey into note investing at FIXnotes.com.